Financial with Christopher Calandra, Certified Financial Planner, is an innovative, comprehensive, informative, and cutting-edge podcast that discusses financial topics ranging from personal finance, economics, politics, and personal growth. Simply Financial will cover intriguing and thought-provoking questions so that the listener can simply increase their financial IQ.
Welcome to this special episode of the Simply Financial podcast. I'm your host, Christopher Calandra. I wanted to talk today about this recent market sell-off and the coronavirus. So I wanted to give you an investor's perspective. So investors were experiencing the first disruption of the 2020 year, and it's driven by the coronavirus. The investing experience is no stranger to unexpected surprises, and on Monday, February 24th, all three major equity indexes fell over 3%. You probably saw this in the news. The negative 3.35% return for the S&P 500 was the worst daily performance since February of 2018. So while this downdraft was unexpected, it's not unprecedented. If you look back to the beginning of 1928 as an example, until Monday, February 25th, that's 23,146 trading sessions, over 23,000 trading sessions. Monday's change for the S&P 500 was the 235th worst performance in percentage terms on record. So if you rank them, I know I gave a lot of wordy explanation of that, but let me try again, is if you ranked all the trading sessions since 1928, there's 23,146 of them, this ranked as the 235th worst day. This means that almost 99% of all the days during that period were better than Monday, February 24th. If you broaden this time period slightly to include all of the trading days where the S&P 500 fell more than 3%, there were 326 occasions. A return of negative 3% or worse occurred only 1.4% of all trading sessions. If all returns were normally distributed, you would expect that a day as bad as Monday, February 24th, 2020, would occur about 3.5 times per year. Historically, some of the worst market performance days tend to cluster in weak economic environments, and the uncertainty surrounding the virus certainly seems to indicate that the economic landscape might change. Now, these are all prospective things. There's fears of what might happen with a potential healthcare crisis in this country, the potential that the healthcare crisis might expand beyond China. These are all things that we worry might happen, but a lot of what we fear might happen hasn't happened yet and may not even happen. I'm reminded of, and I shared this with a client before recording this podcast, one of my favorite Mark Twain quotes, and he is so unbelievably quotable, it's amazing. But Mark Twain said, "I've had a lot of worries in my life, most of which never happened." And I think that this is very wise, and it has serious application when looking at investing and the stock market in particular. The market often worries about things that turn out not to happen. It's just normal. It's normal for people, and the market is at its core made up of people. But over the last couple of years, in 2016, the market had a sell-off because of worries that Brexit would ruin the global economy. And even though Brexit happened recently, and at times it had caused the market some stress, at the end of the day, the worst fears were not realized. In the lead up to the presidential election in 2016, and shortly after President Trump's improbable win, there was talk that his presidency would lead to the economy falling apart. You even had Nobel Prize winning economist Paul Krugman saying the economy would be ruined and it might never recover. Well, none of that materialized, at least not 3+ years into his presidency. Back in 2018, late 2018, there was concerns that the Federal Reserve's interest rate policy would lead to a recession. Well, that didn't materialize. We have not yet had a recession. Eventually we will, but the market's fears, especially in December of 2018, about interest rate policy messing up the economy, that didn't materialize. We also had the recent headline risk about the China trade battle, that a trade war would spread and that it would wreck the U.S. economy, wreck the worldwide economy, cause a recession. Most of that didn't materialize either. And that headline risk has faded into the background, especially because the U.S. signed a Phase 1 agreement with China. So it seems like that risk has been mitigated significantly. There were concerns recently about what the impeachment process would do to the market. And so far, and President Trump could get impeached again, who knows, given our political circus that we have in Washington, D.C. today. But there's another example that if the president's impeached, it might mess up the market, and that really didn't happen. And then the last recent example I'll give was a few weeks back, in earlier 2020, you had some serious things happen in the Middle East with the U.S. killing someone from Iran, Soleimani, and some called it an assassination, some called it us taking out a terrorist. We could debate the politics of that. There were all kinds of stories and talking heads on TV talking about World War III and how that might affect everything, including the market. Well, at least up to this point, as of this recording, World War III has not materialized. So going back to the coronavirus and the market sell-off, the market will often worry a lot about things that may not happen. Again, Mark Twain's quote, "I've had a lot of worries in my life, most of which never happened." Long-term investors cannot and should not try to predict if this is the start of a long-term trend or an isolated time period. The only other 1,000-point drops for the Dow Jones Industrial Average were on February 5th and February 8th of 2018. Since then, the Dow Jones Industrial Average had gone on and has gone on to make many new highs. The coronavirus is serious. I do not mean to minimize it. And there is no surprise that its spread is affecting some companies' potential earnings. If this flu-like virus worsens, some corporate earnings in some specific sectors could be impacted quite a bit, and the stock market may continue to sell off. If this is like the SARS episode, which happened, I think, in 2003, or if this episode is like other epidemics, it could prove to be only temporary. I spoke with a client this morning. I referenced the conversation with them already once. The last time we had a significant pandemic in the United States, and I think this is true worldwide, was 1918, over 100 years ago. So this may just be temporary. Our worst fears may not be realized, especially in the United States. In fact, if the market sells off, behavioral finance teaches us that investors with cash could be looking at good entry points to buy high-quality investments that might be on sale relative to perhaps higher prices that they'll be down the line. Maybe not next week or next month, but down the line. Economics and stock market crises are frightening when they happen, but they can also provide entry points for investors that actually want to invest at lower prices. So I've shared this with lots of my clients already. If you're listening and you're a client and I haven't told you directly, please know that we are watching this. I am watching this and all other events carefully. And I want to take a moment to remind you that long-term investors will experience volatility and periods of uncertainty. maybe not always based on the risk of a virus like the coronavirus. It could be the risk of war or political instability or any number of things. But this period of uncertainty and this increased volatility is pretty normal. It may not feel it, but it's pretty normal. I've been at this 27 years now, and I'm an optimist at heart, but I also believe my view on this is based on history and academics and real life experience. So I'm not terribly troubled by any of this. Our goal here at Elliott Wealth Management is to help clients invest and not speculate on their way to achieving their financial goals and winning with money. So if you're a client of ours, I want to thank you. I appreciate the confidence that you have in me and my team as we represent you. I'm here. We are here if you're concerned and you want to talk. For the next few weeks, as always, please try to avoid making emotional decisions based on media magnification. The media is not your friend. Their job is not to help you make good financial decisions. Their job is to get you to tune in, to listen, to watch, to sign in. They're not trying to help you win with money. That's what we need to do together. Remember, investing is a long-term attempt to achieve results that are satisfactory towards your individual and personal goals. As always, we appreciate your business. So as I wrap up, if you're not a client and you've listened to this, we would love to talk to you. You can contact us at 888-959-5904, and we can speak with you. We could schedule a complimentary consultation. You could also go to the website, www.elliottwealth.com, to get more information about me, our team, and our continued thoughts on this market sell-off and the coronavirus. Thanks so much for listening to this special edition of the Simply Financial Podcast. I will be back with you very soon for the next episode of the Simply Financial Podcast.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.
Simply Financial is part of the Exvadio Podcast Network. You can find Exvadio podcasts at exvadio.com/podcast, the Apple Podcasts app, iTunes Store, iHeartRadio app, Spotify, Stitcher, and wherever you find podcasts. So join us and stay informed and entertained.